Well, ladies and gentlemen, it seems like Bitcoin made a nice little move up, huh? Spirits are kind of high in cryptocurrency right now. They're seeing Bitcoin making a good little recovery up, but in tonight's live stream, I'm going to break down what we really need to be paying attention to. It's still looking bad across the pond, guys, and that's pretty simple. We're going to be covering what's going on in the world and how this can impact you, whether you're from the UK or the US, it doesn't matter. Fundamentally, what we're witnessing that's happening across the pond itself, when I say across the pond, whatever's going on in the UK, it's absolute madness. And anyone that is in the UK, just be careful, man. I'm serious. Be very careful. Also in tonight's live, I'm going to be covering a couple of topics. We're going to be going over the carry trade principle. Because according to JP Morgan, they're saying it might not be over yet. So we could get another drop to the downside. On top of that, we're going to be talking about why Bitcoin is not good for a strategic reserve coin. You can say goodbye to decentralization. Completely goodbye. But when I go through this with you all, you'll then come to understand why that could be the case. As much as they're selling the idea as a strategic reserve coin is great news, and that the US government is planning to buy 1 million Bitcoin over the next 5 years and hold it for 20 years to clear the US debt. Well, in order for them to clear the US debt, that means Bitcoin will need to be $1.6 million per coin. That means cryptocurrency, or should I say Bitcoin's market cap, would be 32 trillion. Sounds amazing, doesn't it? But tell me when a government owned or some government that's involved in something, when has it been favorable for the people? It hasn't, and history shows you that. We're going to be diving into that. So make sure you stick in to this live stream, ladies and gentlemen. I hope you're all doing well this evening. I'm paying attention to what you guys are saying in the chat itself. I'm hoping you're liking the background. It's looking all right. We don't have the fake books anymore. But when we go back to the UK, we will be going back to the fake books. But we're going back to changing up the atmosphere. I don't like the books. I've read them all now, even though they're fake books. But yeah, we'll get with that. By the time we've gone through all these articles and the concepts that we're going to talk about in terms of the carry trade principle and making reference to this story about Bitcoin being a bad thing with the strategic reserve, I'm going to break down a little bit of Bitcoin price action for you all, and then that should be happy days. So, ladies and gentlemen, let's get with the program. Let's go with it. So, look what's going on, man. It's bad news. Look at this. It's really bad, and there's lots of conspiracy theories coming about with this story in the UK, how the police are effectively forcing people to actually have this confrontation. It's going to happen over a period of 5 days, and then all of a sudden it's going to disappear like nothing has happened, okay? You've even got, with all the problems that are happening in Bangladesh, you've even got India telling its people, be careful when you travel to the UK. Wow. Is this something to be proud of? No. The UK has fallen. Normally when they say London Bridge is down or, you know, London has fallen, you know, you think, yeah, but it's the UK now. The whole of UK is going crazy. So anyone that's from the States that likes to go over and check out the UK, personally, I'd cancel your flight. Just go to another state in the US, man. It's big enough. Why would you want to go to the UK? It is continuously grey out there, you know? Even the sky is made of the colour tarmac, let alone the... I'm not going into it. But this is where we are right now. And it's just taking over. Look, far-right groups plan to target homes in attack on lawyers. This is sad news. We've got a war happening, man. And it's on domestic ground. We're not talking about the war with Hamas. Check this out. Hamas makes Sinwar political chief. And we thought there was going to be a ceasefire, but not now with this guy. This guy's face doesn't even look like a ceasefire. Would you think that this guy is prepared to continue with a ceasefire? Looking at his face, I don't think so. And this guy back here is just, I don't know what's going on there. He looks like he's just enjoying everything on the right over here. He looks like, I'm happy with where I am right now. This guy over here looks like he's going to get slapped from his wife if he doesn't show or at least smile, given that he's in with the political chief right now. But jokes aside, guys, if there's no ceasefire, then we know that the tensions are going to continue. The US has yet to retaliate or even say anything about what's going on with those US troops that have been attacked. It's not looking good, ladies and gentlemen. And to make matters worse, Jerome Powell, he's to blame, ladies and gentlemen. Why would you blame this guy, man? We look forward to hearing from this guy, but soft landing ain't going to be spoken about anymore. What do we mean by that? Well, when you've got a country that increases its interest rates, if they aggressively increase them, then the impact of that is going to be split between a soft landing and a hard landing. Now, what we thought was going to happen is that the Fed was going to achieve a soft landing. So that means when they do start to cut the interest rates, the US economy is going to be able to, pick itself up, and it's not going to suffer so much with these high interest rates. That's not looking like it's the case right now. And the idea that the US could be going into a recession is getting stronger and stronger. And the idea of a hard landing, which means that the economy is going to suffer greatly because of this increase in interest rates, is now making people get a little bit concerned about where they're going to be planting their money. They're no longer interested in short-term dated securities. What does that mean? Well, it means that they're not going to be putting their money in short-term bonds. They want to get it into longer-term bonds so that they can at least generate a fixed income holding on to a longer debt bond. So that means the 10-year bonds. That's why you're witnessing the 10-year bonds shooting up. I mean, this is the volatility index, VSTR times 2, okay? And I'm going to be explaining this another time to not confuse you all. But just to put it quite simply, this is where we are right now with the 10-year bonds market. All right, they did take a little bit of a move lower, but the bigger picture is suggesting that investors are still going into bonds and they're picking up a little bit of a discount in preparation for tomorrow's 10-year bond auction. 58 billion, ladies and gentlemen. We're going to know if they really mean business, because if that bond auction comes through and they really do pick up a lot of bonds and people are interested in the 10-year bonds, then that only means that investors are going to be taking off high risk and then going into low risk, which is what you call the 10-year bonds market. Okay? They're not interested in shorter term debt anymore. That would be the 2-year yield. Look at that. 2-year yield right now, it's 3.99%. And the 10-year bond, 10-year yield itself is at 3.9. So we are so close to a disinversion on the yield curve, because right now we have a yield inversion where you earn more money holding a shorter term debt of the US government. That doesn't make sense. But now investors are going into the 10-year bonds, which means that they're a little bit scared about what's going on in the economy and the world right now. The safest option is to actually plant themselves in US debt for a longer period of time. I hope that makes sense. But then it ties in with what we've got to talk about right now. JP Morgan believes that the carry trade might not be over just yet. Okay? We aren't done by any stretch, says Global FX Strategy co-head. The moves come amid fears of US recession and Japanese rate hike. Going down into the article, it says, we're not done by any stretch, which he pretty much says that. And the carry trade unwind, at least within the speculative investing community, is somewhere between 50 to 60% complete. Well, as of Monday, it seems as though that investors across the board are urged to only have around 0 to 20% exposure in the marketplace. And that is with what we've got right here by Market Search. You can see stocks on that day of Monday was 2,042 stocks took a shoe bag to the downside. And only a few stocks up on volume came through. Well, we know what stocks they are. Those will be your aerospace and defense stocks. And we've got a war. And things are looking good. For a war, that means money is being made in a war. What do you want me to say to you? Welcome to the zero-sum game. One man's fun is another's hell. Going back into the article itself, going into the concept of the carry trade. If you want to know what that is, please go and watch Monday's video, where we're talking about the carry trade principle to help align you with what's going on and why I'm talking about this unwinding of the carry trade. But to simplify for anybody that is new in the live stream, it just means that investors will go and borrow a low interest rate asset such as the yen, okay? And then they will then sell that yen and then go and put it into dollars and then use the dollars to go and buy stocks. And because the Bank of Japan increased their interest rate on the 31st of July, FOMC, and then we had, of course, non-farm payrolls going into the Friday itself, the impact of that has caused chaos, and investors have been urged to sell their yen, sell their dollars, and put it back into yen to save the Japanese yen from collapsing because it's so undervalued. It is crazy. Look what happened to the Mexican pesos. That took a slump down as well on the back of that, and that suffered as well. So you can see this ripple effect all because they increased their interest rates. Japan, it's the safe haven. It's the place where you borrow loads and loads of yen, convert it into dollars, and then use those dollars to exploit high risk opportunities like buying Bitcoin, Nvidia, going into stocks, you name it. Okay. Now it says here, okay, that the subsequent rush to close out short yen positions has jolted both emerging and developed markets used through to destinations for investors deploying the strategy for higher returns. So that's what the carry trade is. And then we talk about the Mexican pesos, happy days. But this is where it gets pretty interesting with this, okay? It says here, the yen carry trade appears to be unwinding at its fastest pace since the currency surged in 2007 after the onset of the subprime mortgage crisis, okay? You remember the subprime mortgage crisis? That was the biggest financial collapse across the world. We've been on alert to the risk of a sharp reversal in currency's fortune since March, and it's now materializing. Our model shows that fear of a US slowdown is the main driver. Not so much the recent rate hikes by the Bank of Japan, but the yen's moves from here probably depend on mostly how the US economy evolves and how policymakers at the Federal Reserve react. Well, the word on the street is that if the Federal Reserve does not cut the interest rates sooner, then what do investors have? They can't borrow dollars because it's just too expensive to borrow dollars. So why borrow them? Then they're only going to be left with keeping their money safe and they stick it into the bonds. So this could be this manipulative move by Powell to try and keep as much liquidity as possible within the dollar and get the bonds up and just keep the government's bank flow turning. Now, to justify why JP Morgan's story about the actual yen trade principle may still continue, which means that Bitcoin can go down, the NASDAQ can go down, the S&P can go down, and everything else can go down, let's look at where we are in terms of commercial hedges. Right in front of you, ladies and gentlemen, is the Japanese yen hedgers position index. And this focuses on three groups of investors. You've got commercial speculators, so it goes into say it. You've got commercial hedgers, large speculators, and non-reportables, which is small speculators. So there's three types of investors. The ones that we want to focus on are the commercial hedgers because they have more money and they tend to do the opposite of what's going on. Okay? In front of you, you've got this green dotted line, which acts like a standard deviation. And whenever it hits that prime peak, it means that the actual commodity itself is primed to make a move to the upside. The last time the Japanese yen hit a peak above this green standard deviation was back in 2007, 2008, subprime mortgage crisis. From that point, the yen then rose from 0.0817 all the way up to around top range. It actually went to 0.13. Okay, so that was a big move. We just hit that yesterday, that same standard deviation zone. Look, we peaked out at that, right there, okay? That means commercial hedgers are priming themselves. They've been buying yen, buying yen, buying yen, because as a hedger, your goal is to protect yourself. Look at gold, ladies and gentlemen. That's the best example for you. When gold is going down, people are like, don't worry about gold. But when you look at gold on the higher time frame, it does show you that gold is slowly but progressively preparing itself to continue to move up. Commercial hedgers are priming themselves and getting themselves ready for a move back up in gold because there is an event that's going to unfold. Naturally, commercial hedgers, investment banks, and all of retail all tend to go to gold when it hits the fan. Right now, we're waiting for the election. Right now, we're waiting for the Fed to cut the interest rates. Right now, we're waiting for the yen to decide if it's going to be done with this carry trade principle, given that it's only between 50 and 60% of the way complete. So the idea is that when you start seeing gold going up and it's hitting the news that gold is now acting as a safe haven, these commercial hedgers are selling into you because they prepared themselves beforehand when gold was correcting. Just look back at gold. For every time gold, okay, has been making a move down, it makes the recovery back up. And then you hear about gold in the news, it's making an all-time high, or it's aggressively moving up because investors are scared. Nah, man. Gold's getting ready to make a nice move, and my price projection for gold is $3,000 and silver $50. Those are my two price projections for commodities. Now, with that being said, given that they've just peaked out on this standard deviation line up here, it suggests that the commodity could be rising in the future. That means the guys that have been buying the yen are effectively going to be selling the yen, okay? And then I thought selling the yen into the people right now that are going to be buying it. So people with dollars that want to unwind on Japanese yen positions that they've got or borrowed yen, they're going to want to have someone that's going to buy it from them. Well, sell it, should I say. And these guys are selling it as it's moving back up. And they're going to be making a very handsome return on the yen appreciating. Okay? Now, crypto. We've got great news, ladies and gentlemen. Bitcoin ETFs, they took a bleed, 168 million during this mad drop to the downside. On top of that, we have got a buying spree. Whales scoop up $1.62 billion worth of Bitcoin in 2 days after the massive price drop. This is bullish, ladies and gentlemen. It's very bullish, you know. But a dude that's buying 1.62 billion, or whales buying $1.62 billion worth of Bitcoin, means that they haven't got a problem with cash flow. They may be in it for the bigger picture. They can probably absorb Bitcoin going down to 30K. They can absorb Bitcoin going down to 20K. That's why they're called whales, because they have enough of it that it isn't going to really scratch or hurt them in any way, shape or form. Market makers have the due diligence that they need to make sure that they are delta neutral. That means that there's no real risk for them in opening shorts and longs on Bitcoin. Now, some other strategies that the market maker might take on would be gamma neutral, or the gamma negative, should I say, which effectively means that if the market maker is short on Bitcoin, he will then hedge himself and then buy Bitcoin on spot just in case there is this mad rush to buy Bitcoin, because you can see that Bitcoin is subject to people talking about it. I mean, look at this article, which is what we're talking about right now. Making Bitcoin a strategic reserve is bad news. Now, the question for you guys is this, offhand right now, and comment, please let me know. Do you think that with Donald Trump suggesting that he's going to want to make Bitcoin a strategic reserve coin will be good news for Bitcoin? Because listen, Michael Saylor says it's a great idea. Now, he said that. He's the worst person to ask. You're only going to expect him to say, yes, it's great. But once this happens, ladies and gentlemen, you've now got a government that is managing Bitcoin. It's true. And that's the worst thing about it. I get comments all the time. I need to just air this out. I get comments all the time that Bitcoin is this. Bitcoin will always. Bitcoin will always. Bitcoin will. Bitcoin will only move based on what someone is prepared to buy and sell it for. That's the truth. But quite frankly, if they do make Bitcoin a strategic reserve coin, decentralization is in the bin for sure. You ain't going to be paying attention to the whales anymore. They're irrelevant. Why? Because the government is going to be the whale. They're going to be the ocean. They're going to be the Captain Jack Sparrow of it all, ladies and gents. They're going to be the Bitcoin's made a move to the upside. Let's keep it low. Let's drop it down because we want to sell as much of it as we can when it goes a bit high. Oh, it's come back down again. We'll pick it back up again. You've effectively got a government that is controlling Bitcoin's price. That's why I'm saying decentralization is out the way. and then they're going to be limiting people from picking it up. There will be a time when the common folk will not be allowed to buy Bitcoin. That's the truth, and that's what I think could be happening the second you make Bitcoin a strategic reserve. It goes into the article and says the following. Every time government steps in and does something like this, they put rules on it. They're going to decide what is the appropriate price for Bitcoin, and they're going to sell it when it's too high. They're going to buy it when it's too low. They are going to decide who owns it. I mean, it's great news short term. Make Bitcoin a strategic reserve coin? Yeah, baby. Up it goes. Remember, they want 1 million Bitcoin, and they're going to be buying it over a 5-year period, and they're going to hold it for 20 years. So it might not impact us per se, ladies and gentlemen, but that's not good news. If you're going to hand down your Bitcoin and then the government's coming along and saying, look, we control it, that means Bitcoin's going to turn into the greatest stable coin in history. I'm not telling you something that's wrong. I'm just giving you the facts on my opinion on reviewing this information. I mean, literature review. That's what I'm doing. And we're reviewing it and thinking outside of the box. Great news, Bitcoin strategic reserve, but it's not, because the idea of decentralization is out the window. It is, it's done. That's what my problem is. I'm with this guy. More government control and oversight, you're done. And the bill's about to be passed, which effectively allows the CIA and all the top and the Secret Service to go in on all these underground Bitcoin crime rings. That's just going to completely wipe it out. And remember, governments have around $32 billion worth of Bitcoin. So it's not like they're not picking enough of it up. They could be adding to that stack. So they're getting all that Bitcoin for free. Okay? And they pass this bill where they're going to start buying 200,000 Bitcoin over a 5-year period. That's when they really make the purchase. Well, technically, it's not costing them anything, ladies and gentlemen, because they've already got some of it already. That's my opinion on it. So how does this impact price? Well, before we get into the price action, let's do a little bit of housekeeping per se. I had a few questions about this trading competition with BTCC. Listen. You need to join BTCC first under the Traders Reality link. That's in the description of the video of this live stream. Join through that link. Once you join through that link, you'll then be able to register for the tournament. And as it stands right now, there's 9 participants. And this dude down here, we don't know what his name is, but he's right now in the top spot. He is going to take a nice stack of that $60,000 USDT prize pool, assuming that only 9 people join. Okay, so he's doing pretty well right now. So whoever this dude is in the top position, he's doing well. Okay, and it's going on for a whole month. But in order to take advantage of this, you've got to join first and then you register. That's why a few of you might be experiencing a little bit of difficulty getting into it, because you're not already signed up to BTCC through Traders Reality. So when you see this page, happy days. So if you do want to do it, if you're from the United States, you don't need KYC or VPN to use this exchange. Just only deposit crypto. If you start using fiat, then it's indefinite. You have to use KYC to do so. All right? Happy days. Now, let's get into Bitcoin price action. Having a look at Bitcoin on today. So we saw Bitcoin make a nice bit of a move to the upside. So let's just quickly go over to the 1-hour time frame. What I'm going to do is break down shorter time frames with Bitcoin, and then I'm going to give you my perspective on the daily time frame for my holders. So Bitcoin, it makes a nice move upwards, and I've got a couple of lines marked off here because earlier on I did share this to the platinum members of the channel, and we gave them a couple of setups, and here we go. So let me just get rid of that. So what I was talking about in this setup right here with Bitcoin, this was after the New York Live. Now, if anyone is interested in taking advantage of the platinum setups, just make your way over to the Traders Reality website and go to the platinum membership where you get 20% discount on your first month, and you get 5 trade setups every single day, which quite frankly, you get more than 5 because I cover 6 asset classes. That's the euro, the dollar, well, euro, gold, oil, Bitcoin, Solana, and Ethereum, and then the NASDAQ sometimes when we talk about it after the New York Live, but we cover those 6 asset classes every single day, Monday through to Friday. Okay, so go check that out, and the discount code is pinned to the top of the chat. But what we did today was this. I was talking to the guys and saying to them that we've got a range. And what we do after the New York Live is I prepare everybody to anticipate what to expect within this range. Now, you guys may have noticed that I don't really have that much on my chart anymore. No moving averages, nothing. Just a couple of Asian sessions, all right? And that's it. I don't have no New York session. I'm not interested. Why? Because we want to be paying attention to the first range that is formed at the start of the trading day. Now you can see this is the Brinks box. Takes the first high and the first low that's formed from the start of the Brinks box itself. Now, if you don't know what this Brinks box is, ladies and gentlemen, go back to the Traders Reality website and take the free course breaking down the hybrid system. It's a free course. Go and do it, and it will give you everything you need about the hybrid system. You do need to be a bronze member to join it. That only means you just put in an email so we can get rid of any spam comments that come into the website. But go and do it. It's got PDFs, everything you need, and videos for you to understand the hybrid system, okay? Now, this range right here, what we were suggesting today was this. I was looking to see if Bitcoin could actually come and break down towards the daily open. And what I said earlier on today was that hedge fund managers, institutional traders, and what have you, have to work on probabilities. If not, then what? If that happens, then this should happen. If it can't, then we work on this, okay? There's no definites. There's no ifs, no buts. If you don't see it doing one thing, it could be preparing for something else. And the idea was that whatever range Bitcoin took today, wait for the retrace back into it to then effectively see it make the continuation to the upside, okay? Going into the chart, you can see that Bitcoin did just that. Go to the 50-minute time frame, and you can see that they had made the move to the upside. Likewise, with Solana, she also made the move to the upside. Likewise, Ethereum made the move to the upside, okay? Now, what I was looking for was Bitcoin in principle. I wanted to see if it could actually test the daily open. And the only way we were going to determine if they could test the daily open was if Bitcoin actually broke down below. And what they had done was I marked off the midpoint of the vector candle right here, which was on the 1 hour time frame. And if they were going to come back into that, then we would assume that we were going to see a test from that range down here at 54,823 to see Bitcoin move up. But what they did was what we wanted them to do. They had broke the range. Look, there's the range right there. They had broke that range. And I said to everyone, wait until they recover back into the range to suggest that they mean business. And that's what they did. They moved back up from that point. Now, granted, there are some of the guys that could have gone long at the break of this range right here to trade back into the vector candle region. There's the image right here. Trading back into that point, they could have taken some profits, no problem. But it continued to mark itself up. But why did Bitcoin move up? What was the logic for it to go up? Well, I gave everyone in the channel, gave you guys a heads up on this logic coming into play. Look at the offers. They ate those offers. Now, if we just refresh the chart itself, you can see that there's been a little bit of selling on Bitcoin, okay? What's worse, guys, which then sort of marries up with the idea of what JP Morgan is saying, and that sort of marries up with the Japanese hedgers and what they're saying, and then the idea that Jerome Powell may have got it wrong and that we're going to go into a hard landing. Would you guys agree that Bitcoin could be primed for another drop to the downside? What do you guys think? Because I'm seeing too many guys planting liquidity down at these lows, man. $19 million at 47,299. Going up a little bit more, you've got another, where was it? 17 million at 48,949. Going up a bit more, you've got 25 million at 50,018. Now, let's just put 2 and 2 together and understand that this could be something that happens. And as much as everyone is pumped, yeah, okay, Bitcoin wells are scooping up $1.62 billion worth of Bitcoin. That can also mean that Bitcoin, in principle, from the holder's perspective, he could then end up seeing these guys coming in again because now they've recovered this vector candle. We've got a wick. And historically, we know they like to come back to the wicks. That's not FUD, ladies and gentlemen. You shouldn't be feeling bad about that. Quite frankly, it's brilliant news. Because Bitcoin is going to get cheaper and you can justify when that cheap behavior could start to slow down. Fundamentally, we go all the way down here and you can see that there's not that much liquidity down below at the 20,000 point. So maybe that's good news. Lots of the bids are coming into play and the lowest point is around the 36,000 zone where you've got $24 million worth of orders sat at the 37,695. They said it could never go above $100. They said it could never go down a certain amount of whatever. But we can never say that Bitcoin can't. And you can't be biased and say it can only go up. Well, it can only